Good morning, everyone, or good afternoon, wherever you are. I think we're still waiting on Will, our founder, to join, but we'll get things kicked off, and I'll ping him now, real quick, and then we'll get started. Okay. Perfect. All right. So real quick, we haven't done one of these in a couple of months now because we've been focused on a few different things. I think it's been maybe a month and a half. We were at ECC, that took up a lot of our time, and then we wanted to take some time away to kind of revamp our AMA structure going forwards because we were trying to run them bi-weekly, but we didn't really feel like we had, for example, enough guests or enough cool things to talk about because we were so busy building a cool product. So we've swapped to once a month, and once a month we'll try and have, unless we've got something very exciting to talk about from our end that we can spend an hour delving into, or we'll have some sort of special story time maybe from one of the members of the team. We'll have a special guest joining, and this week it is Addie, if I'm saying that right, from Fly.trade. He's the CMO, and Fly.trade is a aggregation infrastructure. Yeah. Real quick, Addie, do you want to introduce yourself? Say a few words about mostly you, and then later we can get into Fly.trade or however you want to do it.
Sure. Am I audible?
Yep, loud and clear.
Perfect. Awesome. Hi, guys. I'm Addie. I'm the Chief Marketing Officer at Fly. I've been in the space for the past 6 years or so. Early on, started off my journey with trading, and then I was mostly into NFTs. And yeah, right now, I'm super like all in into DeFi. Essentially, I'll just give like a quick intro about what we do at Fly. Fly is like a multi-chain liquidity aggregator. We are currently live in 19 chains. We're trying to optimize swaps for traders, protocols, and agents. Essentially, we aggregate like DEXs, DeFi protocols, which is so we allow people to do like anything, any asset swap. So yeah, that's like a quick intro about me and Fly as well.
Thank you. Perfect. Your mic, by the way, is a tiny bit, I don't know if it's staticky or like a tiny bit peaky, might be the better description. I'm not sure if that's a Discord thing or just a mic quality thing, but we can still make out what's going on. So it's not the end of the world, but just to check if it's on the right mic, just to be sure. Yeah, and then real quick intro for Will, Amalgam's founder as well, who's joining us because we're going to be asking some more technical questions that I am less equipped to answer, but just also to intro myself. I'm Alexander or Alexi or whatever you'd like to call me. I'm head of marketing community here at Amalgam, and then Will, aka Julian Galway, is founder. And do you want to give a quick intro for yourself and also maybe a little background on Amalgam, even though I'm sure everyone here is quite familiar, but just in case anyone's joining from Fly.trade's side.
Yeah, sure. Hey, everybody. Will, founder of Ammalgam. Been in crypto, mostly on the trading side. Got really started trading back in like 2015. I think was actually looking at this for ETH's 10-year anniversary. The lowest I ever bought ETH was I bought 6 ETH for $38 in 2016, and bought Bitcoin for $250 at one point in 2015. And as my tweet said, I sold too early, bought back higher, didn't hold enough, didn't buy enough, and super grateful to be in the space regardless of all that. And yeah, really got sucked in really hard into crypto during kind of DeFi summer. Near the end of it, sort of watched it from afar on Twitter, being like, what the fuck is going on? I mean, it was just so insane what people were saying they were earning on some of these like early DeFi projects and Yam coins and all that different, all the food coins. And but got fascinated with trading and lending. was doing some market making on Uniswap, was also trying to hedge in interesting ways on Compound. Basically was a connoisseur of everything that was coming out. I would try, a lot of different DeFi protocols, and then there was a paper that got written by Tarun from Gauntlet that really talked about the intersection between trading and lending and the different protocols that were people were doing things, putting those two together. And I just saw this gap, which was that people either tried to build a lending protocol on top of a DEX, or they tried to build a DEX on top of a lending protocol. The first of which is like Alpha Hemera, Gearbox. Aave even had a product at one point called Aave AMM. The second would be, something like originally Balancer Boosted Pools, I think was the first DEX on top of a lending protocol. And since then you have like OX Fluid and Euler Swap. And I just, my main thesis that led to Ammalgam was that it would be really interesting if you could, instead of building one on the other on one, build them completely integrated. And that was sort of this very simple idea that led to a lot of discovery and answering questions of like, well, how would you actually do that? And ended up with this just really cool product that you can create permissionless lending. It's a completely self-contained lending protocol that we can launch anywhere. Just random things from the timeline that I saw today is Mark from Aave talking about how all the Aave deployments on the smaller chains are not cost effective. The cost of running on those smaller chains just doesn't make sense for how much they make. And honestly, Aave is a very expensive business because of the analytics that goes into running it. And what we've created is a permissionless free lending protocol, right? But also with the DEX built in. So there's so much about Ammalgam that I'm super excited about bringing to market. Just high level for people that aren't familiar, we just finished our second round of audits with Cantina, and then also our primary auditor reviewed our changes. We have some fixes to make, and we're hoping that we can get all those done by beginning of September and launch in September. And so excited about Fly.trade. I think I don't know if it's Addie is my headphones are not on, but we ran into each other at a just randomly at a AMA, right? Like there was some Twitter space that I think we were both on, and kind of DM'd each other, and then later I think found out that I asked we have a deal pending with Sonic that we're pretty excited to announce, and I asked the Sonic team who they thought was the best aggregator to talk to in the Sonic space, and they said Fly.trade. So kind of two points of contact that kind of happened in a pretty quick period of time. So I'm really excited to have you here and chat more about potential synergies and learn more about what you guys are doing and share a little bit about what we're doing. So
Absolutely. I think you probably met at one of the Pewcast AMAs on Twitter.
Yep.
Yeah, that was pretty interesting. Yep.
All right, thank you, Will. Okay, so the general structure of this is planned to be, and we'll play things by ear as we always do. Sometimes we notoriously switch things up a lot, just depending on what is more fun and interesting to talk about. But I have a few questions prepared that are intended to be directly targeted towards both Fly.trade and Ammalgam. So my hope is that both Addie and Will, you'll be able to answer each of these, or maybe just have a little discussion about it, which obviously I will partake in to the best of my ability. But first, real quick, Addie, do you want to give a quick, like, slightly more in-depth rundown on Fly.trade and like how did Fly.trade come about? How long has it been around? How big's the team? Anything really, everything.
Sure. So, Fly.trade started off, I mean, it's been 3 years since we actually raised our first round. So the story is like this, right? So we had our previous venture, which we sold to Singularity Next. And then we sort of we're not really looking to build anything, right? So we were just looking to manage our funds. And we were trying to use wormholes at that point of time. And then we prepared like a solution that we were just supposed to use for ourselves. And we pitched that to Wormhole, essentially just to showcase that we are building this and we would need your support just because we need it for ourselves. And Wormhole, which also then was Jump Crypto, they actually told us that they want to fund us and they want us to build this for the public. So that's how Magpie started. Now it's called Fly.trade. So essentially, the main issue that we're trying to solve is liquidity fragmentation. Right? With more chains comes more dexes and liquidity across all of these different chains. And the main issue for end user is that he has X token on Y chain, which he wants to swap to uh, another asset that he has on different chain, right? So all these complexities in DeFi is really a pain at the moment as far as user experience is concerned. And as more and more chains come into play, there's like every single month we have so many chains, so many L2s, even L1s launching. The fragmentation problem is only going to be up from here, right? And that is the place in which aggregators like us come into play. We are like a true aggregator, so we don't have we don't rely on other third-party aggregators to aggregate our liquidity. So yeah, that is the whole purpose of Fly is because there's like a liquidity fragmentation that is happening across different chains and inside chains itself. And that's how we're trying to solve it by aggregating our liquidity and allowing people to get the best rates possible.
Got it. And by the way, how when did Fly's name change from Magpie to
Yeah.
Fly?
Yeah, so that's like an interesting story. So right before our TV, we were thinking what's the best approach for us to actually change our name. One of the things that we are thinking was we want to unify our brand into one single identity. Magpie and Fly are sort of on a different way from each other. And we thought, if we can name ourselves Fly.trade, which is also our domain name, the moment that we get exchange listings, and there is, all the exchanges and other distribution outlets that talk about Fly, it ends up on our website, right? So that's how we got like crazy traffic around our TVE because people actually, whenever they search Fly.trade, it lands to our website, right? So we thought of what's the best possible time for us to do a rebrand, whether it's pre-token launch or post. And we figured out that it's a lot easier for us to rebrand now before the token launch. And that's why we did it. And it went pretty well for us. So what we did was, because we are super Sonic aligned, we were at a conference in Vienna, like the Sonic Summit. That was like the first Sonic conference that ever happened. So we announced our rebrand on the conference itself on like a talk post. So yeah, that was like the story of us rebranding. The rebrand happened right before our token launch, and yeah, it went pretty well.
Got it. I think Fly.trade is a cool name, by the way. I'm a fan of the rebrand.
We gotta take some
Wow.
notes because we talk about rebranding all the time. So this is super helpful alpha.
Yeah. Yeah, I mean, I think the conversation recently has been shelved, but it's always a fun conversation to have is new names or rebrands or anything like that. Okay, let's dive into things. So this is again Will and Addie for the both of you. Maybe Will, do you want to go first, and then Addie can go second for this one. We might change it up question by question. This is more related to I've got a couple of brief sections here. This one's more related to product philosophy and market design. So most dexes either use AMMs or order books. Both come with trade-offs. How do you approach liquidity design, and do you think the current models are holding DeFi back?
Yeah, I mean that's a great question. I think that there's a lot of tangents lot of pieces of string that I could pull on and see where they go. But I think that the main probably on topic tangent that I would go on here is that I think that on-chain liquidity is still subservient to centralized exchanges, and the deeper liquidity is still on centralized exchanges. And so what central limit order books have not yet fully, I feel like, taken as much mind share as automated market makers, and more specifically recently centralized limit or concentrated liquidity automated market makers. But I think that will eventually shift. The two things that I think that we did differently, right or wrong, is that because of our design, and I actually just got some feedback from somebody about this, and I was like, you're right, and kind of a V2 for us is something more like concentrated liquidity. We did not prioritize concentrated liquidity. We actually forked from V2. And the two motivations here, one was the complexity of borrowing against the automated market making position is much simpler if you have full range liquidity than when you have concentrated liquidity. The byproduct of concentrated liquidity that's not very nice as far as a math point of view is the non-fungibility. And when you have non-fungibility, each position has a different characteristic of how you compute its value, especially when you're allowing people to borrow against it. So that's kind of just a design consideration we had to make, and why we went with V2. Now, having said that, we allow you to borrow X and Y against your market making position, which allows you to either loop or create a more concentrated position in using a different mechanism, right? Instead of having a range order or a rate limit, limits on your liquidity like you would on V3, you just borrow all the liquidity that you don't want in range, and you actually get the exact same effect. You can have much more liquidity in a concentrated range. The downside of that being that in concentrated liquidity on V3 or V4, when you go out of range, you don't get liquidated, right? In our situation, you can go out of range, you can keep earning swap fees even if you don't have any exposure to one asset, right? You're like net negative on say ETH and just have stables, but you're still earning swap fees. The thing is your sort of IL keeps going, and eventually you have so much debt that it is starting to grow in excess of how much collateral you have, right? And that can result in a liquidation. So much larger range, you can do interesting things like delta neutral strategies that don't go in and out of range and only earn swap fees on like one side of the range. I think there's a lot of power in that. The on the tangent of being like subservient to centralized liquidity, this is kind of like a known issue, is that a lot of people are just wrecking liquidity providers on chain by arbing the price between centralized and decentralized exchanges. And we don't necessarily have a fix for that, but we have a mitigation for that, where our swap fees are not constant, right? So they are based on how much you move the price. And so the more you move the price, the more you pay. And if you sort of 9x the price, you would end up paying a 40% fee, right? A massive fee. And so what that does on a smaller scale is that when these SexDex ARBs happen, our pools will not ARB as far as quickly. It will take longer to ARB, and when they're getting ARBed, the fees will be much higher. And so this helps offset the impermanent loss risk. It's that happens when the price moves quickly on a centralized exchange. I think I'm probably going on too many tangents, so maybe I should pass the mic at this point and go from there.
Yeah, we can. Yeah, we can give Addie a run at it just real quick, just for everyone's reference. I mean, we won't have anyone else on speaking for live questions on this call, but anyone who wants to ask questions in chat or in the live question chat, there is a portion dedicated at the end to answering live questions. Yes, so go ahead and do that for anything that you may want to know or just ask about. Even if it's something as simple as asking how Will's weekend was. Cool. Yeah, Addie, sorry, do you want to take a run at it? Do you have anything to add?
Yeah, I mean, so the question was also around, how do we approach liquidity design, right? So I think one thing that I would like to say, about this liquidity in general, is that it all boils down to the user experience, right? As you're saying that centralized exchanges, the liquidity that you have and the UX that they have to offer is still very superior if you compare it to the, like decentralized experience that is happening in the market. Right. With that said, the approach that we are taking is that because there is liquidity in the market at the moment, and there's liquidity, but there's fragmented liquidity, right? So there's liquidity in different DEXs, there's liquidity in different MMs, there's liquidity in different DeFi protocols, right? So what we do from Fly's perspective is that we aggregate all of those liquidities, and then we see which one gives the user the best price. Right. So we check like thousands of routes and like give you the best route possible, which will give you the cheapest rates in terms of, gas fees, in terms of just fees in general from Dexys. So essentially what happens is, the way that I see this as like a UX problem is because centralized exchanges have like far more superior depth, but in DEXs, there's a lot of DEXs, and like everyone has their own things, right? In which there's MM with automates to realize um our users to get the best rate possible by getting those aggregated data and get the best rate without even checking on which DEX the swaps are getting routed to. Right? So yeah, that is like just to take that into account.
Got it. Thank you. Yeah, I mean, so you mentioned UX again. I mean, every so often your mic does cut out a tiny bit when you're speaking or peak a tiny bit. So every so often I'm struggling slightly to keep up. So bear with me. But you did mention UX, and this applies to maybe more Amalgam, but uh just generally. So like a lot of protocols launch with like big incentives and a lot of token hype, and they go token first. And Amalgam in particular, and you can verify if this is the same case for Fly.trade. But I know that you mentioned your token earlier already. So, but Amalgam started with product and UX, which is, I guess, the more visually glamorous route, but the less economically glamorous route. Do you think it's been worth it so far, or what are both of your thoughts on that? Will, if you want to go first from an Amalgam perspective.
I mean, I think that it is the right way to do this, but I also think that we haven't quite launched a token yet, so there's a lot to be learned. I think there that um, I just think that there's so much in the space where it's like token first, and it either never comes to fruition or people do a shitty job or they rug or whatever, right? And we just the mission for us has always been like what we're building, right? I think the token is sort of a byproduct, and at some point we're going to need to shift focuses and the token becomes your product. And they have a competitive nature, but I think it's really important to start with a product in the beginning.
Okay, so because I mean I think we're all aware that many platforms nowadays or products are much more um almost token first oriented and focused. Addie, what are your thoughts on that?
I read this in a thread on Twitter the last day. But and it made me thought about like think about this very importantly. So there's essentially the thread mentions that there's two times that you can actually launch token. One is before you launch your product, and the second one is once you have a product market fit, right? So essentially, like from Fly's perspective, we always have been product first. So we have been revenue generating since the past, I think, uh, like 4 or 5 months now, since when we started charging like progress ticket. We still don't charge fees at the moment. Um, so from our perspective, like token and also the business that we are in, like it's not a necessary thing to have like a token, right? So from our perspective, we always wanted to make our product like number one priority, have the best fits possible, be the best aggregator in the space, in terms of efficiency and or routing. So yeah, from our perspective, we always focus on it's product first, try to build the best thing for us, for our API users, and as well as the front end users. And then, so actually, we actually pushed our TVE a lot. It's pushed, I think, by a year and a half. So we were supposed to do our TVE in 2024 early, but then we started pushing it a bit because we are not comfortable with our product. That it's the best product that we could have built. Right? So we kept on shaping the product. We kept on building the best form of our product. And yeah, then once we started generating revenue, we thought that we are comfortably distributed in other businesses. We then thought of launching our token. So I think the way that people should, progress with token launch is once you have the product, which is the core part of your business figured out, you should probably then launch tokens. That because if you have the fundamentals right, your product is correct, you'll probably have a very good run with your token instead. So I think product first is the way to go, at least for us, from what we see, because usually the second type is actually launching your token first before even launching your product. But essentially, what happens is you can get a lot of hype initially before you launch token, before you launch your product. And once you do launch the product, people start to match their expectation with your token price, which is not going to be super good because you can never match people's expectations with regards to pricing and products. So yeah, that is what happens usually. If you launch a token before you launch a product, it doesn't end up well in majority of the instances. So yeah, that's just my take.
Got it. Okay. Thanks for that, Addie. I have a slight follow-up more. I'm specifically interested to hear about Fly's perspective on this. So from what I can gather, Fly's clearly designed with power users in mind. And what pain points in particular do you think most dexes overlook for more serious traders, and how are you solving them?
Okay, repeat the question once.
Just like what pain points do you think or what problems, I guess, for
Mhm.
users from a user's perspective, do you think dexes overlook when it comes to like more serious traders? Uh, and how are you solving them at Fly?
Yeah, I think when it comes to the traders, the people who are active trading, maybe the power users trading big tigers, the most uh, of the things that we have learned by this market survey, talking to our power users, is going to be um, like depth, right? So because different dexters have different codes, so essentially what happens is, people go to a deck and they try to swap, let's say, a token, right? And it will give them the price based on how much liquidity they have on their deck, right? And what essentially will happen is they also need to try to see other dexes to potentially check on if the other DEX is giving them a better price or not. Essentially, what happens is, giving a Web2 example, let's say you are booking a flight, right? So you would probably go, if you directly go to Emirates and book a flight, you'll probably be looking at just one flight, which is by Emirates, right?
Mhm.
If you go to, let's say, a website like Skyscanner, you'll probably have like hundreds of aircrafts, and then you can just pick the best rate, which is like it's might be in terms of pricing or in terms of just travel duration. So you have a lot of options, right? So what we offer is flexibility in terms of what dexes you can choose to be aggregated. So you can even go to our UI and manually select the dexes that you want us to aggregate. If not, then we aggregate all dexes that we have on that particular chain. Essentially, we give users optionality, and optionality usually means better pricing because we aggregate all of the pricing in all of the chains and all of these boxes. So, swapping using one bus versus using an aggregator will always be providing like a better price because there, chances are like there is a dex that is providing a better pricing than the dex you're using. So yeah, that is how we are planning for that.
Perfect. Thank you. Will, do you have anything to add there in regards to how Amalgam, what sort of pain points in particular Amalgam is trying to solve for more serious traders?
Yeah, I mean, I think that we on the what let me try to gather my thoughts here. I think the main thing that we tried to do on our UI is we saw that there were products getting developed. I mean, one that I think that we looked at, or I guess I can name a few that we looked at that really tried to create an easy way to create leverage positions. And so I think one product that I'm a admirer of is Contango, that allows you to create leverage positions with multiple lending markets, and then just do it in one transaction. And this is just something that feels very obvious. I know Aave at one point tried to do this in their UI. It never really seemed to be a priority or something that they focused on. But that was something for us that seemed like really important. And there's a few others. There's like a product on Blast that we really liked, that had the same thing, that you can just swap, but also go long or short, right? And so for us, the really cool part about this is it all executes natively on our protocol. There's no sort of like bundling of multiple protocols that's happening. It can all happen on our protocol. The one thing that I'm excited, and we've already talked to Fly's, I think, BD team about this, is like, we actually think that there's going to be a lot of situations that it's going to be a disservice to execute the swap on our DEX, just because we may not have the deepest liquidity. It might be better to execute it on Uniswap or whatever DEX is got the deepest liquidity for the pair that's getting swapped, and that we can offer our users a better experience, even though it may not result in fees for our liquidity providers. And I think that's just sort of acknowledging the spaces, especially around execution versus the origination of a swap versus where it actually executes, is a very complicated space that we don't want to sort of interfere with the inefficiencies that already exist. And so, yeah, that's something that doesn't exist in our product now, but we are very excited about sort of having that available fairly quickly, because at the end of the day, people creating leveraged positions will still benefit our liquidity providers, because the market makers are able to earn yield from the lent out tokens that are originated from these like leveraged positions. So there's also, I think, something I'm more excited about that I've learned over again that I, sort of don't lead with, because the it's more of a right curve. If you're familiar with the bell curve of left curve, right curve, it's more of a right curve feature, which is our like deluxe product, which is meant to really simplify and make it very easy to have access to very sophisticated strategies. Like when I was doing these in the early days, it was like, multiple transactions, right? With approvals, it's just painful. But, to create, say, for example, a delta neutral market making position in, 2001, I would provide, USDC collateral on Aave, and then borrow ETH, and then take that ETH and more USDC and deposit it into a market making position on Uniswap, right? So with approvals, that's like, I don't know, like 4 transactions or something like that or more. And
Yep.
it's extremely arduous. No one really has a UI around this. And the efficiencies or the improvements on a user experience just on Ammalgam is first, it's we are working to get the approvals down. That's not something sort of immediately available, but there are ways that we can actually get rid of the approvals. But right now they still exist on our UI, but that's something to be improved in the future. But it should just be one transaction, right, instead of 4. And the one transaction will, create a flash loan, use the flash loan to generate the amount of liquidity you want, and then then borrow the assets you want, repay the amounts of the flash loan that aren't used, or properly collateralize it with the LP position. And then all that is done in for you without thinking. And you have this pretty sophisticated position where you're taking a delta neutral exposure to the market and also earning swap fees. So that's just one example of something that sort of was extremely arduous to do on chain in the past, and that we've like bundled into this like single product that I think is extremely interesting and powerful. So those are the things from my perspective. And I think in general, I feel like there's a lot of people that are really doing interesting things in the space. And I don't want to pick on anybody, but I will. I think like this is less on the deck side, but more on the lending side. Is I think Ajna was sort of at the forefront of trying to create a permissionless way of having lending markets on chain. And the problem was that they sort of took all the complexity of Aave and the decisions, the risk decisions, and tried to put it on the users. And users didn't want that complexity. And I also think this is an advantage of V2 liquidity versus V3. I think that there was a heyday around market making on chain on V2 where it was much more egalitarian, where everyone was sort of in it together because everyone had the same range. And V3, I think it had so many obvious improvements, but from a retail perspective, there was a lot of market makers who were sort of able to take a less risky exposure on Uniswap V2 and extract value from it, and sort of there's a lot of situations where the risk is worth the incentives. And then they put Miracle Grow on that and allowed people to basically leverage that up to insane amounts that people didn't understand, and people chase these fees that were like, oh, I can make 100% APY if I have this concentration, but really didn't understand like how quickly their position could just basically disappear because of the impermanent loss. And so I don't know. I'm probably rambling at this point, but those are my thoughts.
rambling is good. That's when you get the least the most unadulterated thoughts from the mind that the person you're speaking to. Okay, so I am a little conscious of time because there's been a few requests for questions and stuff like that, and I also have promised questions. A lot of these are, I think, naturally more amalgam related, but we'll go through a few, and then if we have any time at the end, then we can go through one or two more questions, or although those were kind of the core ones that I wanted to ask. And just for everyone's reference, and Addie as well, this will be on our YouTube. It will be uploaded, it's being recorded, so you'll be able to share it wherever you like, or reuse it, or just look back and smile thinking of how much fun you had talking to us. Okay, cool. I'll go through the chat of the stage first because I saw a few in there. Will, how safe is amalgam from manipulation like hackers do with centralized exchange oracles?
That's totally a planted question, isn't it?
No, it's I don't know who Watch Always is personally.
Oh, really? Okay.
Yeah.
Wow. So somebody watch always is either really paying attention or just asking good questions. So yeah, I think that that we have seen a lot of examples of the earliest example of this, of like oracles getting manipulated on centralized exchanges to create bad results on chain, was with Compound, and specifically somebody manipulating the DAI price on Coinbase in order to trigger a bunch of liquidations of positions on Compound. I think that since then there's been tons of examples, the most recent being the premature liquidation of a bunch of positions because there was a Chainlink Oracle feed that was very heavily influenced by a sandwich attack of a swap on chain. And they were using a volume weighted average price instead of sort of looking at the block price at the end of the swap, or at the end of the block, which is a much more resilient data point, especially on chain. So there's like all these examples of tools like still are not really the best, especially for long tail assets, the best solution. And so a few things that we do to protect the integrity of the assets being lent out from potential manipulations. One, I already talked about a swap mechanism where it's extremely expensive to manipulate the price on Uniswap v3. Like Euler was using v3 oracles for a period until they realized that like it's essentially free to move the price on v3 with respect to how much you can steal from a lending protocol, and it's just like a trivial cost. And then they stopped doing that. In our situation, it's not. The price, the cost of manipulation scales with how much you move the price. Additionally, to that, we only allow the price to move a certain amount per block. This makes it so that any sort of manipulation of the price is actually not is ignored until enough time has been sustained for that price to for our recording of the price to catch up to the actual sort of, whether it's a potential manipulation or a huge price spike. It takes some time to catch up to that, which creates a smoothing effect of like what we actually are looking at in the price. And those are the two main ones, right? There's some additional checks that we do on the sort of origination of loans that we sort of are a little bit more conservative. So you may not be able to, open a loan at a price if it's sort of freshly minted price that's been created. You'll have to wait for a long-term average to sort of catch up, which is also sort of the same smoothing, but just a different mechanism that does that. And then these things all together. There's some things in liquidation that we do so that if somebody does move the price and is trying to force liquidations, whether it's sort of a complete manipulation or just even a gamma squeeze, which is sort of, I guess, still manipulation, but this is like how GameStop and different meme stocks, like they found out hedge funds were very short and they just like created a internet frenzy to buy those tokens to like fuck the hedge funds that were short, and it created these the first meme coins, right, were AMC and GameStop, right? And so that gamma squeeze situation in our protocol, there's some things that we have to do. So basically we have I think Euler called them soft liquidations. We blur the meaning on that a lot in our technical side, but I'll try to avoid getting into too much of the technicals. But we have a increasing premium for liquidations, and it actually starts at a discount where like you can get liquidated early, but essentially you would get paid for it, right? So liquidations can happen early in a way that the LPs or whoever's position is liquidated actually profits from it instead of the liquidator profiting from it. And these effects were specifically put into place to ensure that like if somebody manipulated the price, there's still basically a Dutch auction that uses LTV instead of time that ensures that whoever does liquidate it will do it at like a near market price, and the person that gets liquidated may be upset that they got liquidated prematurely, but it was done at like as close to a fair value as the is possible, so that the losses and the are not substantial, as they would say, be on Aave. If there's like a 10% premium and addition to the price being manipulated, it's a huge loss if that happens on Aave. So these things all in place don't guarantee like a perfect user experience, but the sort of lack of this huge payout incentive makes it much less attractive to sort of hunt these liquidations on our protocol just for just to manipulate the price for no reason, while the game of sort of hunting these liquidations in general is something that is alive and well in the market. You can't really fix that. That's been the case in centralized finance like GameStop, as I mentioned earlier, and is not going to go away. This is why it's somewhat attractive to keep your positions private, is because I think my favorite example was the FTX when I can't remember her name, the girl, what was the girl's name from FTX? Somebody can from the audience can remind me, but she said give me all the FTT tokens at whatever price, and and I'll buy them all. And she inadvertently exposed their sort of where they didn't want the price to go by saying that, so they just like moved the price below that and wrecked it, right? So anyway, once again, going on some Caroline, thank you Casper.
For some reason in my mind it was a very like her name was, I remembered her name as being something really astrology related. I don't know why. I don't know how I got that from Caroline. But I also
I don't know, I don't either.
But no, okay, so moving on with question time, also from the same fellow, Mr. Watch Always. When are we going to get more pairs to create more diverse pools? Obviously, I mean, we're in beta on testnet, so but still.
Yeah, I mean, I'm sure we can create more. I think the main thing that we've been a little bit resistant to like add a ton is because there's some technical improvements that are in process to lower the amount of RPC requests that we need to make in order to load the front page. So if we have like 100 pairs, and we're using RPC calls, it's extremely painful. And so there's just some like UX stuff right now that we're, I guess limiting the amount of load on the front end when you load it. So those improvements are like in process, and I think most of the work has been done to do that. I don't know. Maybe Ishwar can or Nitin can say what the sort of timeline to wrap that up is. I know a lot of it has been that we've taken front end engineers, said, hey, stop working on the front end, like do this thing on the back end and the contract. And so, but once that technical issue is sort of like resolved, it will be we'll be much more willing to like, just like let people list whatever they want. But in the meantime, this is really just meant to be a proof of concept. So unless there's a team, that wants to have like a co-marketing opportunity where they want us to create a pair, we're probably just, doing this on the test net for now, and more worried about people just sort of getting the product and being able to critique it, give feedback, and until we're completely confident that we have all the technical pieces in place, we'll probably keep those pairs to a limited number. But if you have something that you really, really want, make a suggestion. I'm sure we can, add that pair if you're an active community member, and we'll take it seriously.
Perfect. And this is a fun one. There's a double-barreled one from two different people following on from one another. Any token sale plan, and in that case, how many months or weeks in advance do we plan on announcing the tokenization of the project?
Yeah, it's a great question. I think that there's so much we can do around this. I know that there's like launch pads and different stuff like that. I think that, the problem with airdrops essentially is always that you're dropping value to people that essentially like oftentimes sell those tokens immediately. And the struggle is to figure out, like, instead of just giving these tokens to people who want to sell them, is to figure out who actually wants exposure to this project. And like, typically people are willing to buy the token. So like, why don't you just sell the token to the people who want to buy it instead of giving it to an intermediary that's just going to sell it to them directly, indirectly. And so the two things that I think I've really liked in the space, having like, participated in a project early on. One was Infinex. I think that they did a great job of sort of, giving allocation to retail based on their participation and actually using the product with real money. And so I thought that was a great model. I used their product. I got to buy something like I don't know, it was like 15 or 20 patrons because of my usage. I still have those patrons today. I was not just doing it to farm the airdrop. I actually, Kane is a mentor of mine, somebody I believe in, that's like a good actor in the space and has relevant ideas. And so I thought that was a great model. And so I think that whatever we do, I think that if you have strong opinions about this, taking ownership in our community, like, give us ideas, like state your opinion. We're open to how this looks. And I think community-led decisions are usually can be some of the most powerful ones. And so our ears are open. And with that said, I think that what I'm most excited about is not necessarily airdropping value to people that are gonna, sell it to, on the market, but figuring out how to align with those people that want to buy the token And some of the ways that I think that's done best is really focusing on users and people who are excited about the product, independent of the potential for an airdrop. So
Perfect. Thank you, Will. I hope that answered whoever's question that was. One final question before we wrap things up, unless someone has something final in chat. Now's the time to drop it. From Claude Moan, how does Ammalgam help me earn more compared to traditional DeFi platforms? It's a broad question.
yeah, I think the main thing is that like if you're a market maker, your market making position earns swap fees and lending fees at the same time. That's sort of like the very high level tip of the iceberg, in the sense that maybe iceberg's the wrong metaphor here. Tip of the spear, there we go. Because in addition to that, the entire sort of risk framework of like how we limit the system from taking on too much risk is designed to take that risk, charge for it, and then pass those fees to the liquidity providers that are really underwriting that risk. And so there's like a lot more ways than one to earn, for this protocol to actually generate fees in excess of like what's possible right now, because there's just not mechanisms that exist like the one we've designed, right? So you'll, as a market maker, earn fees for swaps, earn fees for the assets that are being lent out to people who are borrowing. You'll earn fees for the risk that's accumulating in the system. And then also we allow people to borrow, making itself, which, so you'll earn fees from, people who are either longing volatility or even just arbing the sort of cost between the borrowing liquidity on Ammalgam and providing it on another DEX, right? So we think those fees should help us to cover potential, like especially if there's inefficiencies in the beginning, that we can overcome those just by borrowing the liquidity ourselves and providing on a much more vibrant DEX that has that's got more traction and it is more integrated in the system initially, right? So all those things in place, like I think, are a winning combination to create like potentially the most effective internet money making machine in existence.
Sounds pretty awesome to me. Okay, perfect. I think that's all the best community questions that we have for now, and I think we've also running out of time, which means we've been pretty spot on timing wise. Addie, thank you so much for joining us. Do you want to say any final words before we shoot off into the night?
Yeah, sure. Yeah, just wanted to quickly thank you guys for having me in the AMA. It's been like a very nice discussion. The questions were super nice. I was also looking at Amalgam, and I'm pretty excited about your launch as well. So I'm pretty deeply rooting for you guys. So yeah, thanks for having
Thank
me
you,
again.
thank you. Yeah, absolutely. It's been great, and yeah, we look forward to hopefully collaborating with Fly.trade more in the future. And yeah, it's been good. For anyone who is curious about when we'll have our next AMA, we're aiming to have them once a month going forwards. We'll send out an announcement when we've got the next one booked and finalized, but it'll either be towards the end of August or at the very start of September. We just need to make sure that it doesn't overlap with our bi-weekly engineering calls, because that's already scheduled, so that takes priority there. All right, Will, any final words from your end?
Yeah, I would just say thanks for joining. We really appreciate you making the time to come hang out in our community, and hopefully somebody in the crowd learned about Fly that didn't know about I, maybe learned a little bit more about Ammalgam. So really appreciate your taking time out of your busy schedule to hang out with us.
Hell yeah. All right, everyone go, check out Fly on Twitter, on their website. Just check them out. I think they're even in our most recent announcement as a link, so you can go check it out there. And yeah, keep an eye out on our announcements channel for more info on the next AMA coming soon. And then next Friday, I believe, is the next bi-weekly engineering call. So be sure to tune in there for some nice technical breakdowns and updates from the dev team. All right. On that note, everyone have a fantastic Friday, and thanks for tuning in. It's been a pleasure.
See you, everybody.
Thank you so much, guys.
All right. Thanks, everyone. Bye-bye.
Cheers.